Stock market's been going down for 7 or 8 weeks, and yet every day there are some stocks that go up. I'm going to show you how to find them, how to capitalize on them with a strategy for buying stocks in a weak market. Plus, I'll give you my analysis of the markets overall. Are interest rates going to stop going up? Is the stock market going to stop going down? I'll answer that. And then we'll look at the swing trade of the week on ALXO. So how do you make money buying stocks when the overall market is going down? Most stocks will be correlated with the overall market. So in order to beat the market, if you're on the buy side, you have to buy a particular type of stock that I call an alpha stock. Alpha stocks are trading on their own story. They tend to be lower priced stocks, smaller cap stocks, that because of something that's happening within their business has captured investor excitement, and they can go up quite dramatically even when the market's going down. Now in a typical week when the market's going down, there'll be 5 to 10 of these alpha stocks. I'm going to show you a couple in a moment from the past week. But they're characterized by a few simple things. First of all, they have visually abnormal volume. So when you look at the stock chart, you can see that the volume is a lot higher than normal. This means that the crowd is gathering around the stock, it's buying the stock aggressively. The second thing that they will have is price gain. They're making price gains that stand out. So we're not talking about up or down a percentage, but stocks that are up at least 3% in the day and typically quite a bit more. And then the third thing is liquidity. How actively is the stock traded? How many trades per day is what I look at. So a very actively traded stock will trade more than 100,000 times a day. Anything more than 20,000 is quite liquid. And if you go to the Stockscores.com website, pull up the symbol for any stock you're interested in, it will show you the number of trades for that stock. All right, so those three things are the essential ingredients for alpha. Now let's actually look at what it looks like. So here is a 13-minute chart on GRTS for this past week, and you can see that right here, it started to trade abnormally. So you can see the volume is quite a bit higher. That was back on the 28th of September. Now what I look for once that happens is I want to see the stock make a little pullback and then come alive again with the old action candle indicator. That's the Stockscores action candle indicator, something that's available in our active live service to my active trader members of Stockscores. But that is the telltale sign that the stock has alpha and is ready to make the next leg up. And you can see in this case, it went from roughly $1.80 to $2.80 in 4 days this past week in a market that was more or less down. Let's take a look at another example. This is AMC, and you can see here the stock has a spike of price gain with abnormal volume. It's the action candle. You can see there the little yellow dot breaking a pullback. And in this case, it's moved up for the next 2 days. And I don't think it's done, by the way. I think AMC is a stock to watch next week because it could also continue to do well. Now I'm going to show you another example of an even bigger mover at the end of the video. So stick around for that with the swing trade of the week. Now, before I get into this week's market analysis, just want to remind you that we have upcoming webinars this week, one on day trading and swing trading. So if you want to learn more about the strategy that I was just showing you, I will go through the actual statistics around this strategy, explain more about how I find them, how I take advantage of those trades. That'll all be on the webinar that's on Wednesday of this week. And then on Thursday, if you're more interested in longer term investing or longer term trading, I'll have a webinar on that topic as well. And then on Saturday, I'll do a webinar that shows the tools that I use, the tools that I've built to find these things, because I'm looking for things that are not common There's no real tool out there to find them, so I built my own, and I'll show you those tools on Saturday. If you'd like to register for those events, just go to the Stockscores.com website, to the homepage, scroll down. There you will see upcoming events and all of the upcoming webinars. They're all free. This is not one of the upcoming webinars. This is our active live service for Stockscores members. But these three, all education, going to teach you about day trading, about investing, and about the tools that I use on the Stockscores strategies. All right, let's get into this week's analysis. And we'll start off with the S&P 500. It was sliding lower for most of the week, but it made a good reversal at the end of the week. And that's a big, important move, because what it does is it breaks the first of the downward trend lines. You can see there, this little downward trend line has been broken. I'm still somewhat concerned because we're still below this downward trend line. So I think it's a step in the right direction. And of course, we're going to see how the events in Israel will play out on the market on Monday. So I really want to watch that carefully. But the initial signs going into the close on Friday were positive. Here's the 3-year chart. And the reason the market was able to make the bounce there is because the market has pulled back to its trend line of support. We've been talking about this for a few weeks. Back when the market broke down here, I said there was a good chance we were going to move down to this floor price at the upward trend line. And that's exactly what's happened. So this is the price point where the market should bounce. And it showed some signs of that happening on Friday. All right, let's move along to the NASDAQ market. Similar, we had a jump higher on the daily chart on Friday. If we look at the 1-month intraday chart, you can see that little downward trend line being broken from a rising bottom. So that's a positive sign that the market's going to start to move back up. And on the 3-year weekly chart, much like on the S&P, the market pulled back to its trend line. So you can see it ran away, it pulled back. It ran away, it pulled back, and it should now continue up. If instead it rolls over and breaks down through the trend line, well then of course we're back into negative territory, a negative outlook, but for now it looks still fairly positive that will hold. I'm really going to wait and see how the market opens Monday, given the events again in the Middle East. All right, let's take a look at the Russell 2000, a little bit of a price gain again. The Russell underperforming the large cap stocks. These are the small cap stocks. And they're underperforming because they're more interest rate sensitive. And in a moment, I'm going to show you the interest rate chart and where that's likely to go. But for now, I think the Russell is underperforming, those small caps underperforming. They did have some gains on Friday, but they are still below the downward trend line. Now on the 3-year weekly chart, we are at horizontal support. You can see how many times the Russell has bounced off of this 170 level on the ETF. So it should bounce back, but I want to see a little more strength before I'm confident in that. And again, it's critical what happens with the interest rate chart, which we'll get to in just a moment. All right, here's the chart of the TSX. And you can see the TSX suffering the last little bit here, last couple of weeks. Weakness, a lot of weakness in the oil stocks this week, which have been real strong, and that dragged this market lower. And so in the short term, fairly bearish market here on the TSX. In the long term, it's not that bad because we do have support that we are bouncing off of, and hopefully it'll hold, but I'd like to see a little bit of strength before I get too confident. Now, gold has been quite weak the last few weeks, but it managed a small gain on Friday. I don't think it's anything to get too excited about because really it's just a market that's quite oversold and due to make a little bounce back. But until it can break that downward trend line from a rising bottom, which it hasn't done yet, but until that happens, I would remain fairly bearish on gold. Looking at the 3-year chart, you can see the trend is down. I would say we are oversold because we're quite far below the trend line. And so the market for gold should come up a little bit in the next short while, but still that trend is down. And so be cautious with gold. All right, let's move along to currencies, which always has a big effect on the commodities. And here you can see the upward trend in the US dollar. And so that is a bullish chart looking at the 3-year time frame. There you can see that upward trend. How about Bitcoin? This is an important chart this week because it's actually breaking a little bit of weakness or sort of quiet markets on Bitcoin. It's been moving up the last week or so. And so we're starting to see the buyers come back to crypto, back to Bitcoin. And looking at this 3-year weekly chart, I like how it's trying to break through this resistance. We've gone sideways for about 3 months and now starting to tickle through. Volume is still light, so I'd like to see the volume pick up. I'd like to see a more decisive break through resistance. But if that can happen, you may want to take a longer look, not only at Bitcoin, but also the crypto miners, things like Riot, MARA, Hive, HIVE, HUT. These are all crypto miners that do well when the actual cryptocurrency is moving up. All right, well, I said that we were going to take a look at the interest rate chart, so let's do that now. This is the inverse of the 20-year Treasury bond market, and this is essentially a good proxy for interest rates. When this is going up, interest rates are rising, and you can see that interest rates have been rising at a very steep rate in the bond market. The bond market really pessimistic about the outlook for interest rates. In other words, bond market believes that they are going to stay high longer, and it's gone parabolic. Now, when trends go parabolic, they usually pull back, and I think we're on the edge of that happening any day now. It's going to be real critical if we see this very steep upward trend line broken next week, then expect interest rates to come back to this linear upward trend line. And I think that would give the market some support. And that would also coincide with what we see in the stock market indexes, where we're seeing some signs that the market's trying to bounce. And I think it could correlate with the bond market bottoming out, which means interest rates starting to pull back a little bit. All right, so let's take a look at my ratings then. Neutral on both time frames for large cap stocks. That is an upgrade this week. The NASDAQ, I've got neutral. It shouldn't be red, it should be blue. US small cap stocks, still short-term bearish, long-term neutral. Same for Canadian stocks. Gold, bearish in both time frames, quite oversold, so we could see a little bounce back in the short term. Oil, short-term bearish, that's a downgrade this week. Long-term neutral. US dollar, short-term neutral, started to show a little bit of weakness last week, which could also be telegraphing weakness in interest rates and strength in the bond market, but still long-term bullish on the US dollar. And then Bitcoin and interest rates, I've remained bullish on both. I think interest rates are due for a pullback and Bitcoin trying to break out. All right, well, let's take another look at one of those swing trades that started with the abnormal activity that tells us that it's alpha. These are the stocks that can move up when the market's moving down. They even do better when the market's moving up, by the way. It's a strategy you can use in both markets. So here is ALXO. And what I want everyone to notice is that on the 3rd of October, it started to trade abnormally. All right, so now we know it's an alpha stock. It made quite a big gap up. I hate to buy those big gaps because they usually pull back a little bit. And so that's what we wait for. Wait for the pullback and then look for the message candle, which is the pink dot, or the action candle, which is the yellow dot, breaking the pullback line. And you can see that just on Friday, moving from a little over $7 to $8.30. And I think it could continue higher next week. So this will be one to keep an eye on. So reminder, we've got those events coming up next week. Please join me for those. Wednesday, day trading, Thursday, investing, and then Saturday, tools of Stockscores and the education that we offer. You can learn more about that at stockscores.com and the upcoming events area. If you enjoyed this week's content, please click on that like button. It helps the algorithm push the video to more people. And most importantly, next week, please trade well.